Yeah, very clear. I mean, valuations have been the main contributor to this move which we've had over the past few weeks and past few months, must be said. So the PE in the US for the S&P has come down by around 10% from its peaks. It's now kind of slightly below 18 times 12-month forward earnings. Quite remarkable, back at the levels where it last was at the end of March, actually. But I think what's even more remarkable in that regard is that, since then, since late March, the real yield in the US has gone up by 100 basis points. And I mean, we've had this very aggressive reaction to higher real yields at the beginning of last year when equity markets sold off very sharply. I think compared to that move at the beginning of 2022, what we've seen just now has been very, very moderate, actually. So this kind of 10% reduction in the PE has come partly from the move in markets. So the market by itself, index levels are down 6%, partly from somewhat higher earnings, which have been upgraded after the second quarter earnings season. But at the end of the day, as said, we're just back at the levels where we were at the end of March, when real yields were 100 basis points lower than where they are today. And since the Fed meeting, they have moved by 50 basis points. Quite remarkable, actually, the resilience which we have seen.
I think that resilience has caught many investors off guard in the equity space. How do you think about the relative attractiveness of European versus U.S. equities here?
Very clear. We think the U.S. is the better placed market. I mean, valuations are very high. We think that they should come down going forward. We think there will be more of a reaction to the higher rates. Which we've had over the past few months. We don't think that rates will go down in a massive way. But on the European side, clearly the cycle plays a bigger role. And here, I think kind of different factors kind of being strong headwinds to what we have on the European side. Most notably, I think China is definitely slowing, isn't really picking up to the scale which would be required for Europe to come out of the hole it's currently in. So we don't think that the European market has much leeway or much potential to outperform.